Hey guys, what is going on? Welcome back to the portfolio. Again, I want to thank everyone out there for supporting the channel. All the viewers, all the subscribers, immensely appreciate the support. Today, I thought I'd go through and analyze the largest holding in the portfolio, Ford Motor Company. There's been a lot of viewers on the channel wondering exactly why is this the largest holding in the portfolio. If you take a look at my current position, you see that I currently own 5,425 shares of Ford. Equity value just over $60,000. So today I thought I'm going to go through why I have Ford as the largest holding in the portfolio, and a lot of that has to do with value investing. For new viewers on the channel, value investing is a stock market strategy in which you're trying to identify and then buy stocks that are trading under their intrinsic value. That is, the price of the stock is trading under the true value or the true price of the stock. If you were to add up all of the assets of a company, to sell those off and then give back to the investor per share a proportion of that profit. That number would be higher than what the stock is currently trading for. That number is very difficult to determine, and overall the intrinsic value would have things like assets, liabilities, future earnings of a company that go into evaluating that company, determining that number, as well as some intangibles as well, brand awareness, brand loyalty. For example, Apple Computer Company is much more valuable because of its very strong awareness in the market, as well as brand loyalty. They're able to charge a premium for their products just because they are Apple products alone. So it definitely has a lot to do with the intrinsic value. And overall, with value investing, you're looking at the longer term approach as well. Buy and hold investing. You're trying to jump into a stock and then hold it until the market readjusts, until the true value of a company is recognized by other investors that drive up the price of the stock. And then you can either exit your position or hold on to that stock for the longer term as the company grows over time. So not only is the intrinsic value something that you're taking a look at, but also the future potential of a company as well. So to determine the intrinsic value, very, very difficult. There are a number of different metrics out there, but there are a couple that I typically use when evaluating stocks, and which I use to evaluate Ford Motor Company. The first one is the book to price ratio, and this is a very good way of valuing what is the underlying price of the stock versus what it's trading for. Typically, a PB ratio is less than 1.2 would at least tell an investor that there may be some undervalued potential in a stock. Very easy number to calculate. Simply take the price of the stock divided by the book value. The book value is really the net asset value of a company. Again, the underlying assets, if they were all sold off, would be that net asset value or book value for a company. So you take the price divided by the book value. If that ratio is less than 1.2, there may be some under-recognized value in a company. For Ford Motor Company, for example, if we look at just the book value alone, again, what the underlying assets of the company are, they've been actually increasing over the past 5 or 6 years. Back in 2014, it was 5, 2016, 7, and currently the book value is 9. The price to book ratio has been decreasing over that time frame, even though that book value has been increasing. So the price to book ratio, back 2014, it was 3.5. That has trended down to 1.22 currently, right at that mark, that threshold in which a company may be undervalued with regards to its true underlying asset value. So for Ford Motor Company, even though book value has been increasing, the price to book ratio has been decreasing. That's a very strong indication, at least from my analysis, that Ford may be undervalued. Another metric to take a look at is the price to earnings ratio. I've talked about this in a number of prior videos as well. Essentially determining how costly is the stock. Each company, you can take a look at how much is an investor willing to pay for each dollar of earnings, and that really goes into the price to earnings ratio. Again, I've talked about this extensively in other videos. The price to earnings ratio for Ford Motor Company, if we take a look at just the earnings per share, has actually been increasing over the past 5 or 6 years. Ford Motor Company, it is an automotive company, so it does tend to go up and down quite dramatically as the whole industry does. But it's increased from 1.6 to 1.8 over the last 6 years. But in that time frame, the PE ratio has dropped substantially from 11, it went up a bit to 14, but now it's down to 6.3, just most recently down to 5.8. The average for Ford's motor segment, the market segment, is 13.5. So not only is the PE ratio for Ford decreasing, but for the entire market segment, it's much higher, about double that of Ford. So I think there's some underlying value with Ford Motor Company based off of those numbers. So the PE ratio has been decreasing, while the overall market trend in that particular market segment has been about twice that of Ford. So based on the price to book ratio, based on the price to earnings ratio, Ford looks like an undervalued stock, a buy and hold stock that I'm going to be holding for the longer term. Another key aspect of the investing strategy that I'm utilizing for Ford Motor Company is the fact that it has a very good dividend as well. If we take a look at the current statistics, we can see that the current dividend yield is 4.804. Including the special dividend, this is over 5.1%. So while you're waiting for the market to recognize value in the stock, you can also pick up that very good dividend payment as well. 5+% dividend payment per year. So while you're waiting for the market to recognize value in the stock, you can pick up that very nice dividend. Again, 5+% dividend on this stock. So this is why I have jumped into Ford. This is why I think Ford is undervalued currently, based on the price to book ratio, based on the price to earnings ratio. I think there is a lot of value that is unrecognized in Ford, as well as a contrarian investment. Again, if we take a look at the 5-year graph, you can see it's been currently decreasing down to 4.88% despite record profits in this company, despite a book value that has been increasing over the past 6 years, despite earnings that have been increasing over the past 5 years as well. Both the P/B ratio as well as the PE ratio have been decreasing. So I think there's lots of value in Ford. But again, this is going to be over a longer term perspective, probably 5 to 10 year perspective. But while you wait for that value to be recognized, you can pick up that very nice dividend. Currently, like I said, over 5.1% when you factor in the special dividend. So that is why Ford is the largest holding in the portfolio. I think this is a fairly safe investment. Again, this is not going to be a substantial growth stock like a Netflix or Amazon, Google. This will not be trending up 100, 200, 300% over a time frame of 5 to 10 years, but it's a very safe, reliable dividend producing stock. And again, I think there's a lot of unrecognized value, and over the longer term, I think this will have very good capital appreciation as well. So those are the reasons I jumped into Ford Motor Company. Let me know if you agree or disagree with those analyses, with the PB ratio, the PE ratio, as well as holding a very good dividend paying stock over the longer term to pick up the dividend while you wait for unrecognized value to emerge in the overall market. Let me know if there's other stocks that you think are also in a similar situation. Again, PB ratios, PE ratios are just two of many different metrics you can use to evaluate stocks. The intrinsic value of a stock is very difficult to determine. Like I said, assets, liabilities, future earnings, some intangibles like brand awareness, brand loyalty have a lot to do with it. But if there are any other stocks out there that you think fit a similar mold, please let me know. Always looking for new stocks to jump into and new stocks to research. So let me know either way. And not to make the video too long, I'll kind of end it here. Again, if you guys have any good video ideas, please let me know. Any stocks that you are currently trading that you think would be a worthy addition to the portfolio, please let me know as well. And kind of with that, I'll end the video, and we'll see you guys next time.